Welcome, dear listeners, and a special hello to all my subscribers and new visitors on Gist Shelf Digest. I'm glad you're here. On this channel, we explore powerful books that shape the way we think about life, work, and money. And today's pick is one of the most respected investment guides of all time. Before we dive into the summary, take a moment to picture this. The world of investing can feel like a stormy sea, unpredictable, exciting, and sometimes overwhelming. Prices rise and fall in minutes, headlines stir emotions, and everyone seems to have an opinion on where the market is headed next. In that noise, it's easy to lose focus on what really matters, building lasting wealth with patience and wisdom. That's where The Intelligent Investor comes in. Written by Benjamin Graham, the legendary teacher who inspired Warren Buffett, this book isn't a get-rich-quick guide. It's a timeless manual for thinking clearly, managing risk, and making smart, disciplined choices in a world often ruled by fear and greed. In this episode, we'll explore Graham's core ideas in a friendly, story-like way. You'll learn how to stay calm when the market panics, how to spot real value when others chase hype, and how to invest with quiet confidence, even when tomorrow feels uncertain. So, grab your headphones, settle in, and let's begin the journey through The Intelligent Investor, a book that's not just about making money, but about mastering your emotions, your decisions, and finding long-term financial peace. Introduction: The timeless voice of Benjamin Graham. Imagine sitting across from one of the greatest minds in financial history, Benjamin Graham, the man who mentored Warren Buffett. In The Intelligent Investor, Graham doesn't just tell us how to make money. He teaches us how to think about money. He shows us how to stay calm, rational, and wise in a world driven by greed and fear. Part 1. What does it mean to be an intelligent investor? When Graham says intelligent, he doesn't mean someone with a sky-high IQ. He means someone who controls their emotions and uses discipline, not excitement, to guide decisions. The intelligent investor is patient, thoughtful, and, most importantly, realistic. He compares the stock market to a person called Mr. Market, your unpredictable business partner. Every day, Mr. Market offers to buy your shares or sell you his, but his moods swing wildly. Some days he's euphoric, other days he's depressed. Your job: don't follow his emotions, take advantage of them. When he's fearful and offers low prices, that's your opportunity. When he's greedy and prices are high, step back. Part 2. The two types of investors. Graham divides investors into two types. First, the defensive investor, someone who wants steady, hassle-free results. They invest in high-quality companies and government bonds, focus on safety, and rarely trade. Then, the enterprising investor, someone ready to do the homework. They study financial reports, look for undervalued companies, and stay active in managing their portfolio. Neither path is better. It's about knowing your temperament. Are you the calm observer or the curious detective? Part 3. The margin of safety, your shield. The most powerful idea in the book, The Margin of Safety. Imagine crossing a bridge. Would you walk it if the weight limit was exactly your body weight? Probably not. You'd want a margin, a safety buffer. In investing, that means buying when prices are well below a company's real value. That way, even if things go wrong, as sometimes they do, you're protected from major losses. This principle is the cornerstone of value investing and the reason Benjamin Graham students like Buffett became legends.
Part 4. Emotions are the real enemy. Graham reminds us that the biggest threat to our wealth isn't market crashes, it's ourselves. Fear makes us sell too soon, greed makes us hold on too long. The intelligent investor learns to detach emotions from decisions. Markets are like the ocean. Waves will rise and fall. If you're swimming calmly, you'll stay afloat. If you panic, you'll drown. Remember, it's not timing the market that makes you successful, it's time in the market. Part 5. Value versus speculation. Graham draws a sharp line between investing and speculating. Investing is like planting a tree. You nourish it and let it grow steadily. Speculation is gambling, hoping to get rich quick. Now, speculation isn't always bad if you treat it like entertainment, with a small portion of your funds and clear limits. But if you let speculation take over your plan, you'll start chasing trends, following the herd, and losing focus on your core goals. Part 6. Stocks, bonds, and balance. The intelligent investor doesn't put all eggs in one basket. Graham recommends a balanced approach, typically splitting investments between stocks for growth and bonds for safety. The exact mix depends on how comfortable you are with risk. If you're cautious by nature, maybe 25% stocks and 75% bonds. If you can handle ups and downs, try 50-50. But adjust slowly, not emotionally, as markets change. Part 7. How to spot a good investment. Graham encourages investors to dig deep beyond price charts and buzzwords. Look at fundamentals, the company's earnings, debt, history, and leadership stability. A strong balance sheet and consistent performance usually outweigh temporary dips or hype. He urges, don't buy a stock because it's popular, buy it because it's valuable. Like buying a house, you'd inspect the foundation, not just admire the paint. Part 8. Lessons for modern investors. Even though the book was written decades ago, its lessons are timeless. Today, social media and day trading apps amplify market noise. Everyone seems to have a hot tip. Graham's advice is the same. Stay focused, stay skeptical, and stay patient. Being intelligent isn't about reacting swiftly, it's about standing firm amid chaos. Focus on long-term growth, not short-term excitement. Be the tortoise, not the hare.
So, what's the final takeaway? Investing is less about brilliance and more about character. Stay rational when others panic. Seek value when others chase trends. Protect yourself with a margin of safety. And remember, your biggest advantage isn't predicting the future, it's controlling your behavior. Benjamin Graham's wisdom still echoes today. The investor's chief problem, and even his worst enemy, is likely to be himself. If you can remain patient, consistent, and calm, if you treat the market like a partner, not a casino, you've already taken the first step toward becoming an intelligent investor. And that's the real reward of Graham's philosophy: peace of mind, built on confidence rather than chance. And that wraps up our journey through The Intelligent Investor by Benjamin Graham, a book that proves true investing isn't about luck or timing, it's about discipline, patience, and wisdom. Remember, the most powerful tool you have isn't a fancy stock app or a secret market tip. It's your mindset. Stay calm, think long-term, and keep your emotions in check. That's what turns ordinary investors into intelligent ones. If you enjoyed this episode, don't forget to subscribe to Gist Shelf Digest for more book breakdowns that make complex ideas simple, practical, and fun to learn. Give this video a thumbs up, share it with someone who's just starting their financial journey, and let me know in the comments what book you'd like me to cover next. You can also check out our playlist on personal growth and money wisdom, perfect companions to this topic. Thanks for listening, and until next time, keep learning, stay curious, and invest not just in stocks, but in yourself.